Is she under attack? Is ARK Invest, Katie Wood running ARK Invest, so that refers to she, is she under attack? Are hedge funds or any kind of market players attacking her funds? We spoke about this a couple of weeks ago, the risk of being invested with other investors that might do things that maybe are not so prudent. ARK Invest has been doing things that we disagree with, although we do respect them as a fund, as a research institute. I think their trading and their marketing methods are not the most prudent ones, and it's possible that they're being under attack. I'm going to discuss this and also in general discuss what we see happening in the markets right now. This is the Not Even Wrong podcast. It's March 4th, 2021. This is Krim Delco. For the day, the fund is down 4.9%. The market's down 1.3%. We are down 12.5%. The market is up 2%. We are underperforming by 14.5%. Needless to say, this is by far the worst underperformance we've had for a long time, definitely since the inception of the podcast. Today's action again was a reflection of the last couple of days where we started fairly stable and then just deteriorated. There was some issues with the treasury market, but I don't think that it's the treasury market, to be honest. I feel that there is a potential attack to particular stocks, and our stocks are part of that, unfortunately. Tesla and the CRISPR stocks could be under attack. And here's what we think could be happening. So ARK Invest is the kind of company that does ETFs. We've spoken about this. They are a research company, a long-only fund, and they do ETFs. And the ETF, an exchange-traded fund, allows people to participate in the portfolio of ARK Invest. This is, in a nutshell, what's happening. I can discuss the mechanics a little bit more, and then I'm going to go to my conclusion about why I think ARK Invest could be under attack through a gamma squeeze. So ARK Invest puts together a portfolio. Let's say they call it the Genomic Revolution portfolio. These are maybe 100 stocks in the sort of CRISPR, genomics, cell therapeutics, and bio space. Some of them have very large positions, such as Pacific Biosciences, about 10% of the fund. Others are smaller. Now, so far, so good. They create an exchange-traded fund. So they put this as a sort of master fund, the portfolio that they have, and then people can participate in that portfolio by just buying that particular fund. There's a certain mechanics behind it that are provided, amongst others, by MSCI, an index provider. So if, let's say, Joe Schmo in Florida buys into ARK Genomics Revolution Fund, then the money gets allocated exactly according to a certain allocation that ARK Invest has decided. So far, so good. These are normal things. This is how the S&P 500 works, the Qs, the NASDAQ ETF. There's a lot of people that trade like this. Now, here's the thing. What we don't like about ARK Invest is that they're going out and marketing their funds to pretty much anybody that listens. These are companies, in particular the genomics companies. They're pretty early stage companies. They're companies that really have much more of a startup feel than a like, you know, company that should be trading in an ETF and should be marketed on cable financial TV and all that stuff. These are companies where the future potential, the potential in terms of what is possible is still all in the future. And what they have is a tree, a root of technology, of intellectual property and talent, but they still have to execute a lot. And there's trials, there's data points to come, there are clinical trials. Hopefully they come out well, and there's potential for M&A. So there's a lot of catalysts for these types of companies, but they're not the kind of companies that give you quarterly earnings and dividends and all that kind of stuff. So there really is not a lot of support other than the belief that they can deliver in their execution of fundamentally new concepts and engineering practices. we are invested in those companies for the particular reason that we believe that they can help bring more digitization and computer science practices into life science, that there is a huge potential also for bringing better protein design through the combination of CRISPR and protein design through AlphaFold technology. So there's a lot of upside, but it's all in the future, and sometimes even in the a little bit further future. And that's fine. I think we are okay with that, but I think a lot of people aren't used to that kind of investing and probably will not be able to stomach the uncertainty that comes with that kind of investing. And you could argue, well, that's why ARK Invest is there for. They're a research company, they have professionals, they have Katie Wood as sort of the head of the fund, and people trust her a little bit like Warren Buffett. And you can say, yeah, that's fine. Actually, Warren Buffett was very similar in the 50s and 60s, like what she is now. And maybe she can turn into a Warren Buffett and become a $1 trillion fund. Now, here's the thing. I think that that might be the case or not. That's not even the point. But she is vulnerable to attacks, and in particular, a gamma squeeze attack. What that means is that hedge funds could drive her stocks down, therefore drive the ETFs down, then trigger outflows, and then kind of create a vicious circle where if she has outflows, she has to sell, then they sell even more, then she has to sell more, etc., etc. In particular, a gamma squeeze would be when you buy an outsized position in put options in certain stocks that are in the genomics index, and then because of that, there is somebody has to sell those puts, then they have to short stock against those puts. That creates pressure on the stocks. Then she gets outflows, then she has to sell, then the person that has been initiating the puts can do even more. So there could be this vicious circle that she is vulnerable. She is, as far as I know, doesn't have leverage. So in that sense, she's not at risk of, let's say, going bankrupt or anything like that. But it's still a pretty high risk, and it's something that we also have to monitor on our side at Orange Capital Partners, because we are invested in very similar stocks. So this is just, I want to illustrate the risk that the real mechanical risk that funds like ARK Invest can cause within the context of the financial markets and within the context of stocks that we are invested in. And again, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And this is exactly the kind of stuff that maybe you definitely don't learn in business school. You don't even learn in the first couple of years of running a hedge fund. I think this is something you just sort of grow into and you kind of internalize, and it's very important. Again, on our side, it doesn't change our fundamental view. It doesn't change anything other than we have to be very, very careful with our leverage ourselves, because if she gets caught and the stocks drop a lot, then of course we have a problem also. There are other factors that are driving this sell-off right now in the growth stocks that we're invested in. One is the treasury is still very unstable. So like last week, we discussed that there is certainly technical, mechanical issues in the treasury market, but we still believe that there is probably some hedge funds are blowing up, literally having problems and causing this, maybe a risk parity fund, algo traders, hedge funds. It doesn't really matter what exactly they are, but let's say these alpha seeking absolute return funds with very special strategies that include treasuries. Some of them are in trouble, creating havoc in the treasury market, and then that proliferates through the financial markets. Other reasons for the sell-off, I would say, are also definitely what's happening in Washington. It's not paramount, but the threat of higher taxes, the very, very bad, I would say very bad body language and actually English language that Janet Yellen, Treasury Secretary, is using, and others like Elizabeth Warren. It just doesn't help. Not that I don't think they have actually that much might to really change the flow of the financial markets, but they can definitely cause, let's say, turmoil on top of the already existing fears that are in the market. So to summarize, I think we have to deal with the drawdown that we're dealing with. We are now at a drawdown of roughly almost 30% from the peak. So this is definitely a very substantial drawdown. We are running the risk of losing customers. These are things that happen in the hedge fund business where it's not new to us. And again, like I discussed in several episodes before, it is very important to understand what's going on. It already helps you get through it just by understanding and having an explanation. So the explanations for the sell-off, I think the biggest risk is the potential for ARK Invest to be attacked and therefore triggering sell-offs in the particular stocks that ARK Invest is invested in. Some of them that we own. Then there's the treasury turmoil driven by losses of alpha-seeking absolute return funds, either risk parity, hedge funds, algo traders, probably all of the above. There is some bad language coming out of Washington, some fears of higher taxes. There's a rotation also into energy stocks. In particular, the rally of oil markets is not the best sign for the economy, so we have to be careful. But the overarching theme is that we have a recovery in sight, that the recovery will be strong. Probably will have very, very strong GDP growth in the next couple of months, and maybe the next quarters even. That will certainly put some pressure on inflationary situation. It will then maybe trigger the Fed to put the brakes on a little bit. So all of this is now being priced in the market. But what's most important for us is that in a recovery, fundamentally new concepts and engineering practices actually have even a tailwind, can do better. So our companies, the fundamental outlook for our companies, the actual business situation on the ground is expected to improve, and that is very good news for us. Thank you.